Likely to see power stations looking to South Africa for alternative supply. We get insight from mining analyst Peter Major on what this means. Mr. Major, thank you very much for your time this evening. Can you give us a little bit more context and insight into what could possibly be a European energy crisis?
Well, Ukraine is very important for a lot of reasons. It's arguably one of the biggest and richest, certainly in minerals, mining, and in grain production and food production in the Soviet Union. It was the largest country in Europe for almost 1,000 years. So there is huge coal mining in Ukraine. It's got a history going back hundreds and hundreds of years for coal mining. And that eastern part of Ukraine has huge coal mines that supplied Europe and supplied Russia and supplied itself. Now, you can imagine if those coal mines are put out of business, and or there's sanctions that prevent them from exporting to some of the European countries or other reasons they can't export. And if there's sanctions on Russia, which does export some coal as well, it's a tight market. And we've seen too many people have gone to green too quickly and tried to just get out of coal. And green isn't reliable and you can't store the energy yet, not for very long. So you don't have to take very much coal off the market. And just look at a price. You know, we've gone from 120 to 220, and I saw some spikes. I don't know what the volume was, to 330. So, yeah, the longer this war goes on, the more likely coal is going to stay at, this is steam coal, going to stay at 220, 240, 250. And I don't believe anybody has a production cost of over $60 or $70. So the margins are huge, and consumers are going to pay this price. Utilities are going to pay the price.
What does that situation mean for South Africa?
Perversely, it's actually good news for South Africa because Eskom gets low-grade coal that until recently wasn't exportable, and they're locked in long-term contracts. So their price increase shouldn't be very much. But the coal that we can export, it's bumper yields, it's bumper profits. Now, the problem with South Africa is we haven't taken care of our infrastructure. We've stolen from it, we've vandalized it, we haven't replaced it, we haven't.
And are you talking
it.
specifically about Transnet there? Sorry to interrupt you, but I want to, be very clear about this.
Not specifically, but mainly. But our harbors are way behind. We have the worst productivity almost in the world on harbor productivity. And yes, Transnet, mainly, it can't get the coal to port. Our ports are inefficient. They're way behind. They're not even close to the productivity they had 20 years ago. Transnet can't do anywhere close to what it did 20 years ago. Now, most countries are growing at 4 or 5%. They should be doing 50% more after 20 years, if not 100%, like a lot of our competitors have done. So we're missing out. Indonesia's making money. Colombia's making money. And we're making money on what we sell, but we should be selling 10, 20, 30 million more tons than we are.
So as you said, perversely, there is an opportunity here for South Africa. How does South Africa's position, or lack thereof, on Russia's aggression play into those dynamics and the likelihood of South Africa being given opportunities?
I was a little surprised to read how mellow the United States took South Africa's neutral vote. I thought the United States was probably going to put more pressure on the country, but the ambassador in the paper said, well, they're neutral and that's their prerogative. We thought there was reasons to vote against Russia. So I think South Africa got off pretty lightly for their neutral vote. And it doesn't look like there's any repercussions on South Africa's relationship with Russia so far. So the immediate downside is it's our own fault. We've blown our own foot off. Had we taken better care of our infrastructure, we could have been making billions more. We saw Exxaro alone said they lost $5 billion by coal they couldn't export. Well, Exxaro has many bigger brothers that lost a lot more than that. And that's on the coal side. We know we're losing billions not exporting iron ore that we should be. So, yeah, the high prices, the war, it's benefiting South Africa miners across the board. PGM prices, gold prices, coal prices, iron ore prices. We are really benefiting by these high prices. And consumers, they're going to pay more for their oil, a little bit more for electricity. But so far, the consumers aren't going to get hit very hard.
A knee-jerk reaction on initial reading, you might think that a quicker transition to renewable energy would be a good thing. But you're saying that people flocking to renewables at this stage is not sustainable. Am I hearing you correctly?
Yeah, it's kind of 3 steps forward, 2 steps backward. The world continues to grow at 2.5%, 3.5% a year. Now that's a world of 8 billion people. So as fast as we can build eco-friendly power plants, whether it's nuclear or solar powered or wind powered, or even converting to gas, there's still enough growth in coal that we could be a good coal exporter for another 20 years. It's just due to world growth. Sure, coal is becoming a smaller percentage of total electricity generation, but it's still going up in overall usage. And that's the reality of growth when you have 8 billion people on the planet. So we could be making that transition. You know, we could say we're not going to build any more coal power plants, but we could be cleaning up the coal plants we've got, and we don't have to increase our coal-fired generation plants here. But as long as we're supplying Eskom with this low-grade coal, we uncover all that high-grade coal, we might as well sell it overseas and bring in billions of dollars and use that money to generate more green energy, construct more green energy generation here. So we can get a lot of good out of the coal we've got. We don't have to open enough mines to increase production. We don't have to build more coal power plants, but you know, let's at least take advantage of these high prices so that we benefit by those billions of dollars rather than our competitors.
Well, thank you very much for speaking to us and for your insights. That was mining analyst Peter Major.